Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Megan Brantley, the Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking sportswear, we're talking Foot Locker, we're talking the impact of maybe slowdown in sales in apparel. We've seen that across the retail space so far, but then also you've got that impact of Nike to Foot Locker. What kind of data are you guys seeing out of Foot Locker into this earnings report? Because I think expectations pretty low here.
Yeah, so whenever we look at Foot Locker, this company is kind of facing an uphill battle as this sneaker middleman. And a lot of that has to do with just the fact, like you mentioned, like with Nike, that brands are realizing that they have the power to go direct to consumer. And so if you think about what this looks like for Foot Locker in 2020, I think Nike comprised about 75% of Foot Locker's purchases, and they expect this to drop to 65% this year, and then ultimately to be below 55%. So this is, a huge shift whenever you think of this name. And so Foot Locker is definitely trying to diversify its product lineup. So it's starting, trying to increase its partnership with Adidas, and we don't really see a ton of traction here when we look at that brand partnership. It doesn't help that it had to remove all of the Yeezys off of its shelf recently, certainly. And then even last week, Foot Locker announced an expanded partnership with Puma. And so this one looks a bit more promising, at least in our data, because we do see Puma as kind of this up-and-coming brand. But overall, Foot Locker was propped up on a one-legged stool, and now it's realizing that it needs to diversify its product strategy. And while it's got a plan, so far we don't see this execution actually taking place, at least in LikeFolio data. When we look at overall consumer demand, we see that down by about 6% year over year. I will say that's not necessarily a severe drop as we've seen for a lot of other names, but that's still a decline. And I don't think that they're building on a ton of success here. As you mentioned, the bar is pretty low. Another thing that Foot Locker is doing is, they're trying to promote this exclusivity. They're trying to feature these exclusive product drops, and they're leveraging this on their app. But on this chart, you can see this consumer sentiment, and you can see this drop off at the end. 25 points. To see a move like that in our data is pretty rare. And a lot of that has to do with poor app performance. So people are talking about, trying to use the app to, score a new pair of these exclusive sneakers, and the app errors out, or the app completely shuts them out. And so this is definitely something where Foot Locker wants to be careful, because you don't want to leave a bad taste in consumers' mouths. And, sometimes with exclusive drops, we do see negative sentiment when consumers, miss out and can't get their hands on a pair of shoes that they were looking for, but at least they were able to get into the app. This is kind of different for Foot Locker, just in the sense of the overwhelming amount of error messages that we're seeing of consumers being locked out. So I think that Foot Locker still has some things to work out, at least in its turnaround plan.
Yeah, Megan, brick and mortar retail has fallen out of favor, right? They may be making a small comeback, but I think the bigger story with Foot Locker, as you know, it's got a very low PE. It's got a very large dividend. Now, we don't like to talk about dividends because they're not guaranteed, but they've got a new CEO who came from Ulta Beauty, who had a great track record at Ulta Beauty. She took their e-commerce from 4% of their business to 30%. The value of the company tripled under her career there. So this woman who could take this retailer, this brick and mortar retailer, and turn it into an omni-channel company might be the difference and a reason to look at a name like Foot Locker, even though they're transitioning slightly away from Nike and into other products. But this CEO should put a little confidence in this company, Megan.
Yeah, I think that Mary Dillon has a great track record, at least in terms of leadership. And I think that, Foot Locker does have a plan. It is smart that the company is diversifying its product lineup, to rely so heavily on one single name like a Nike, that's a little bit risky as a company. So it's good that you're starting to see these partnerships with names like Adidas, and especially with a name like Puma. In our universe, just for reference, Puma demand is actually up 20% year over year. So this is kind of a growing brand. I think it's also key that Foot Locker realizes it needs to leverage this component of exclusivity, especially in the market that it's operating in. This element of sneakers is really important moving forward, that consumers feel like they can turn to Foot Locker to gain access to these exclusive drops that they can't get anywhere else. This is really what's going to differentiate the company from peers. And I think part of this app is a piece of that plan. It just needs to kind of, button up its execution there. But overall, on this chart, these are just overall brand mentions of Foot Locker. So this is the hurdle that, new leadership is facing and that Foot Locker has to get over. Just overall, people are talking about this brand less. Those two quarters that I have highlighted is the quarter that they're reporting on and then the current quarter that we're in. And those are two of the lowest volume numbers that we've seen in years, really in the history of this chart that goes back to 2012. So Foot Locker definitely has a brand problem that it needs to fix, and I think it has a plan. It's just, at least in our data, we're not seeing signs that the turnaround is happening, at least from a consumer perspective, quite yet.
Yeah, and maybe possibly heading into a recessionary environment, and people not spending as much on apparel and goods. That's not positive, Megan. But you mentioned the Puma partnership. They've just expanded that. Is that what this company should be focused on, besides the fact that they need to expand their e-commerce business, which is just under 17% of their business now? They're going to need to expand that. But is this all about saving this company more partnerships with more brands?
I think that that's definitely a key element moving forward, or something that, we've seen drive the needle historically in some other names that we've looked at, whenever brands, especially in the sneaker wear component, can offer an exclusive item to their customers. And that's kind of what they're doing with this Puma brand exploration. They're expanding the basketball lineup, and they're expanding these exclusive drops. So now consumers will be able to start to make that connection of, oh, if I want this special pair of shoes, then I'm going to turn to Foot Locker. Previously, there hasn't necessarily been that connection there. So I think that that's a key element moving forward, and something that we'll certainly be watching. I think that Foot Locker did try to do this with Adidas too. We aren't seeing as much traction there. So it's good to see them, identifying other brands, multiple brands that could potentially help to drive demand overall for their platform.
Yeah, and the death of the mall-based businesses probably not helping there also. Do you guys have an earnings score going into this report, Megan?
Yeah, so heading into this report, our score for Foot Locker is -17. So that technically falls within our neutral category, but definitely leans a little bit more bearish. So we do think the bar is pretty low. And as you mentioned, there are reasons that long-term you could be optimistic on this company if it executes. We just aren't seeing that come to fruition quite yet.
Yep, negative data. I'm not surprised on that front as they continue to lose some of that Nike business, and foot traffic remains subdued. All right, Megan, great stuff as always. Appreciate it.
Thanks for having me, guys.
All right, that's Megan Brantley, Vice President of Research at LikeFolio. Kev, one of the